Good morning, Forex traders. What's going on, Forex family? It is 2:25 a.m. Central Standard Time here in Texas, and it right now is considered the London session. It is Friday, last day of the week, last trading day of the week. Hope you guys been having an awesome trading week. I haven't really been able to catch many trades, but my analysis has been lining up. A lot of analysis has been lining up. Trades have been falling through, and if you guys have been able to catch them trades, then more power to you, and I'm glad to be of service. But we're gonna get into pretty much a long session tonight. Probably gonna be here over an hour right now because it's the London session's last day of the trading week. Uh, before you guys go and enjoy your weekend, we're gonna try to get through as many currency pairs as we can right now. Go through some trades, look for potential trades, and go through some analysis that we have already done. So, with that being said, let's get into it. All right, family. As you guys can see on the screen, this is SmartTrader.com. The this is a charting system that I am using currently, and these I use it mainly because they already have the Fibonacci's and everything already ready to go. So they have it all set up for you, and all you have to do is just plug and play, pretty much. So with that being said, let's go ahead and get into the charts right now. Now we've been having a lot of market movement right now, and we're gonna see if the market actually did some things that we thought the market would actually uh, want, what we thought the market would want to do. So we're gonna get into it right now. Whenever the charts decide that they want to load up. And we're gonna go ahead and start with the currency pairs that we've been going over the majority of this week, and that's the British pound pairs. And we're gonna go ahead and get into that right now, since it's decided to load up. So we're gonna start with the Great British Pound and Australian Dollar, and we're just gonna go all the way through them. So British Pound, Australian Dollar, weekly time frame. We got your uptrend, we got resistance, and we got support inside the consolidation range. The market has broken outside of that consolidation range, but we have a stochastic that is overbought, and it's starting to reverse, possibly getting ready to go down into the oversold zone. But we have the consolidation range, so that's all we're concerned with right now. So we are going to sell resistance and we're going to buy support. So let's go look for that same idea on the daily time frame. Daily time frame, we're just looking for highs and low prices. And the daily time frame here. And on the daily time frame, we did have a downtrend that was we had a downtrend line that was broken, and we have uptrend. We have this uptrend line here that's still in place. So we're in the sell zone. We have broken into the buy zone. We have this Fibonacci swing here. We have this Fibonacci AB swing, up AB swing inside of a capital A B downswing. So the market is going up to try to find its C, and if the market would hit this price point, that would be where the market would find its C. So what I am thinking, since on the weekly time frame, we are at resistance here, and we're looking to sell resistance and buy support. Since we're at support, looking to sell support, we're at resistance, looking to sell resistance with an overbought stochastic. Daily time frame also has an overbought stochastic that's getting ready to reverse. Uh, a good idea that I would like to do is place a I would like to place a I would like to place a sell limit right there. Sell limit at that price point of 8984. So if I was to place a sell limit at the 8984, which is it's still 314 pips away, but I'll put my stops 10 pips beyond that A. Oh, that's a lot of pips right there, man. From what it's saying, it's 1,868 pips. But if I'm going to risk 1,868 pips, I would like to go for thought I had my measuring. So if I'm going to risk that many pips based on the daily time frame, then my reward is going to be 3,766 pips. Now, if you think the market is not going to do is not going to go that deep or move that far down, we can just take, for example, this movement here from October 11th, 2018 to December 3rd of 2018. So almost 2 months you had a downtrend in this market. And how many pips did that market fall? If that measuring stick is correct, the Great British Pound and the Australian dollar dropped over 1,500 pips in a 2-month span. From October, from basically the beginning of October, October 10th, all the way down to December 3rd. For 2 months, October, November, and the early part of December, when the market started to reverse, this market fell 1,500 pips. And then from that point to current price point now, with today being March 8th, 2019, the market has been in an uptrend for going on 3 months, December, January, February, and in March. 3 months, 1,400 pips. So that could be a long-term, that could be a position trade. I would take that trade and I would hold that trade, because my stops are going beyond the A, and if the market does not take out the A, it has no choice but to go your way. So at this present moment, I am going to do a stop. I'm going to do a sell limit in my MetaTrader 4 app. Let's do that right now. GBP AUD. GBP AUD. Okay, what's going on here? Alright. I'm gonna say, well, let me make an order. Alright, we're gonna do a sell limit. And what price point is that? That price? 8984. 1.8984. Alright, that is my entry. My stops are going 10 pips above that. 2.0546. So stop loss is going to be 2.0556. That is my stop, and my take profit on this sell trade is going to be way here, down here at the 1618 extension, and that price point is 1.4884. So 1.4884. All right, the order is open, and we're just going to wait and see if the market wants to finish out this Fibonacci sequence here. The market wants to finish out this Fibonacci movement We have our C down here at the 5-0 retracement level. Going to go up to that 1618D extension, and the market has been making its way up to the north. But to get a little bit more precise with it, stochastic is in the overbought, starting to come down to the south. So we can look on the 1 hour time frame and see if we have any broken trend lines. And as we can see here, the market actually looks like it wanted to start selling the market. And if you guys can see right there, okay, 1 hour time frame, we had a bullish crown formation. That 618D extension was hit, and looks like the market is doing some sideways movement here. But we did have 3 levels of resistance, and this was the pattern that we was waiting for the market to do. And did the market actually do that? Not in precision of how we drew it, but the market actually did do that. Market came up, then the market started to wave down and actually broke this trend line and went straight down to this trend line, and then now has just been riding this trend line, has been riding it out of trend line. So that was a good selling opportunity. If you guys followed the video, I know y'all saw that. So the market did fall from this point. It did fall all the way down there, so the market fell a good 160 so pips. That's why I like trading the daily time frame on these pound pairs, because they will reverse on you in a flash. So right now we are at this uptrend line. Now we could be looking to sell. We could bring in let's bring in the Fibonacci here at this highest point, and you see right now, guys, we're at a nice high price. The daily stochastic is oversold. If we get this trend line to break, and hold bearish below, we'll start selling the market, and 10 pips above the A. Real quick scalp trade, be risking about 40 so 50 so pips, but you will be going after, let's see how many pips that is, risking 30 pips to go after 145. But like I said, just wait for that market to close below this kind of trend line bearish. And actually, you know what, no, this market would have to close bearish, test the backside of the trend line, hold as resistance, and then start to fall. And at the break of a counter trend line, then you will start selling the market. With you guys, I believe you should know what that looks like. If you don't know what that looks like, I'm gonna draw it up for you right now. So if you don't know what that looks like, the market, say if the market wants to go ahead and break the trend line now, it will break the trend line. Market will come back up, retest, hold as resistance here, then the market will begin to fall. And once the market decides to fall, in that falling, we will sell that counter trend line break, letting us know the market wants to start falling to the south. So yes, it's that simple. And the market actually has been doing what we drew up on the markets based off of our trading style, and the trend line, market gravitating towards the next trend lines. So, and that is the beauty of trend lines, man. It's why you always have to draw those trend lines and make sure those trend lines are on the chart. So with that being said, selling opportunities getting ready to come up in the Great British Pound, Australian dollar, since we are at this resistance level right now. But I am looking for the market maybe to shoot up another 300 pips based off of the daily time frame and the Fibonacci here. That sub swing there. So if the market wants to go and fulfill that, then I believe that 1618D extension will be a level of resistance as we see in the past. And if you guys don't see it, just want to show it to you guys real quick before we go off to the next one. We're going to take our time with these pairs because we're going to be here for a while. But you see that resistance there? See that resistance there? Then you got the support. You got all the support right here. So, with that being said, that's a price point that the market likes to go to. The market does the same things over and over, and that's the beauty of the forex. When it comes to trading forex, the market does the same things over and over and over again. So, all right, that is the Great British Pound, Australian dollar. Let's jump into the Great British Pound and the Canadian dollar. So right there, we have one trade that we have already posted on the charts, and it's a sell. So let's see what we have on the Great British Pound, the Canadian dollar. All right, Great British Pound, we have a uptrend that has been broken. The market has broken this downtrend and has entered the buy zone. But we have consolidation here, and if you want to look at it, since the market has broken this consolidation and it has broken beyond this other resistance level, so we are in the buy zone. The market has entered back into the buy zone, broken out of a resistance level. So the overall movement of this market will be bullish. So we'll be looking to buy this market long term, looking to sell this market short term. So we go to our daily time frame. Daily time frame is for high prices and low prices. We do have a bearish crown formation here, and actually right now you can see the market has went up to the market has went up, and it is finding a deeper right tip of this crown, which basically just means a deeper retracement inside the Fibonacci. So we just readjust the crown formation, and now we have went up to the 618 retracement zone. Get all the stuff on my screen that's popping up, and the market actually didn't. We had that counter trend line. The market broke that counter trend line, held bearish, but market reversed on us. That happens sometimes, guys. It's not 100%, but we're being consistent, doing the same things over and over and over again, just like the forex market does the same things over and over and over again. So with that being said, that right tip, that is a nice high price. Well, that is a high price, so we wouldn't want to buy this market right now because the market is at a high price. But since it's at a high price, we could look to sell short term, and that's where we will go to the 1 hour time frame to see how far we would want to go if the market has broken the trend line. And remember, we have a stochastic that's overbought. That's stochastic overbought, so we can look to sell. We could be looking for selling opportunities coming up shortly. So with that with that right there, let's go in to the 1 hour time frame, and 1 hour time frame we should be able to go down here January 10th, and there should be enough information where we can draw trend lines. Okay, we already have a trend line here on the 1 hour time frame. We have Fibonacci swings. We have an up Fibonacci swing that's in play. The market has been playing with this trend line right here. Hasn't really been showing it much respect, but it's just in the buy zone, in the sell zone, buy zone, sell zone, buy zone. Now back in the sell zone, but we could still be in an uptrend here. So let's actually see if we can get all of that off the charts, clean it up a little bit, and I think that was January 10th I said. Yes, January 10th, that low price. All right, let's see. Let's see what the trend lines look like if we bring them back further. Now we bring the trend lines back further. What do they say? Okay. All right, we have some touches here. Let's see what those touches look like. Okay. Bring a trend line in right there. There we go. We should have another trend line here. No, they didn't drop right. Get rid of that. Just get rid of that one. Let's drop another one. Alright, cool. Alright, now since we redrew the trend lines, those trend lines actually look pretty good now. We went back and we found we had to take it all the way back and redraw up the trend lines. Now the trend lines actually look a whole lot better now. So with that being said, actually the market hasn't broken any trend lines right now, but actually, yeah, the market hasn't broken any trend lines. It's playing around with this trend line here. We've redrew them, so the trend lines actually look better. Let's bring in Fibonacci's here. Yes, let's bring in Fibonacci's at these lows and see where the market might want to go based off of Fibonacci. All right. Okay. Now check this out. Now, you see that 618D extension right there? That 1618D extension was hit and the market reversed. See how the market likes to reverse when it hits a 1618D extension? Market hits that D extension and the market just started to fall. And actually that market fell how many pips once it hit that D extension? Market fell 78 pips. So 78 pips, that's a good selling opportunity. That's a nice high price. We are in the overbought zone on hold on, let's go back real quickly. Stochastic is overbought on the daily. We have a high price on the daily. We're buying short term. The stochastic on the weekly is reversing to go down into the oversold zone. So I mean, like I said, we can still sell this market short term, but we have to wait on the signal. And you guys know the signal. Let's go and draw it up so you guys can see it. The market is messing with this trend line, but we need the market. The market is making highs, making lows. Market makes a high, then the market will break the trend line, make a low, come back, test the back side of the trend line, and then the market will begin to fall. And at the fall of that retest, you sell the market. Simple, guys. It's that simple. So that's what we're waiting for. That's what we're waiting for right there. That's the movement we're waiting for. We have a 618D extension that has just been hit. If the market breaks this trend line, we're going to use power trend line trading. The market breaks the trend line, we'll gravitate towards the next trend line, and we'll try to make a few pips going to the south. We can bring in let's see here. Well, we would have to wouldn't have to wait for the market to actually do those things. We can just bring in a down subswing inside of this capital A to B, And you can see we already would have our first trade. We have down A to B, and we have a perfect 618 retracement level. I don't remember trying to save anything. Okay, but we have a down AB subswing with a perfect 618 retracement, and we're just waiting for the market to break this trend line and come back up to retest, and then we're gonna start selling the market. I wouldn't sell the market right now because this trend line could actually hold, and then the market would go in the opposite direction. So, Great British Pound, Canadian dollar, there it is. Let's go. Let's keep on moving. Let's go to the British Pound and the Swiss Franc. Excuse me, guys. It is early morning. It is early in the morning. But we're gonna get it done. Actually, what's going on here? Oh, my internet just crashed. Wait, hold on. I'll be right back. Something happened with the internet, family. Something happened with the internet. I'll be right back. Sorry about that, family. Something just happened. The internet here is just completely crashed. So I had to go and figure out what was going on, but we got it taken care of. It didn't take long to get it taken care of. So man, we're just gonna jump right back into the charts. We were trying to go over the Great British Pound and the Swiss Franc. Let's see if the charts will load now. Oh, let me fix something. I don't like all that contrast on my face when it comes to the chroma key. Okay, I like that. We'll keep it like that. All right. Sorry for that. Sorry about that. Sorry about that. But I'm back. All right, we did already go to the we did go through the Great British Pound and the Canadian dollar. We went through that already. We got that nice high price with that stochastic that's overbought. We had a 618 the extension of this Fibonacci that had hit, and we're just waiting for the market to give us this movement right here. We're just waiting for the market making its highs and its lows, and it's making its lower highs. We're waiting for the market to go and make that lower low, test the backside of the uptrend line, hold resistance, and then we will start selling the market at a counter trend line break, like so. Sell. All right. So we have a sell on the Great British Pound, and we have a sell. We have a sell on the pound AUD, pound CAD. Now let's go to the pound Swiss Franc. So that's two sales we're looking at right now. All right, pound Swiss Franc. We have a not stochastic. Well, yeah, the stochastic is in the overbought position. We got this uptrend. The market broke that uptrend, and then we have this downtrend where the market came back into the buy zone, broke this trend line broke the downtrend line perfectly, and now tested the backside of the downtrend, tested the backside of the downtrend line, and held support in the buy zone, and now the market is going up. So we're looking to buy long term, and we're looking to sell short term with the stochastic that is overbought right now. So we buying long term, and we selling short term. Excuse me. All right. So daily time frame, we have a bullish crown formation with the market breaking this downtrend line, and we're in the buy zone. And we do have a nice high price. And right now, uh, the market hasn't made any subtle moves yet. So with that being said, looks like we're just kind of waiting since the market is at a nice high price. Could be looking to sell, but this stochastic is in the overbought oversold zone. Um, but since that's in the oversold, that doesn't necessarily constitute us right now finna buy the market, but we are in the buy zone. And let's bring in the trend line here on this daily time frame. And as you can see, the market has been respecting respecting that downtrend line uh, right here. You guys could see that we already have a trend line, a counter trend line break. So there's your first counter trend line break. We could have bought the market there, but I guess it looks like we'll just be having to wait and see. Let's just have to wait and see what the market wants to do right now. Because we got a counter trend line that has been broken. We have a stochastic that is oversold, and that could be the potential U-turn we could be looking for the Great British Pound and the Swiss franc, that we could go ahead and get in to buy this market. But if I'm going to buy that market, I'm not going to buy it and hold it all the way up to that 1618, the extension at the moment. How many pips is that away? Because my risk would be 929 pips, and my reward would just be 800. So my reward is smaller than my risk, than how much I'm risking. So I wouldn't risk that much. So that being said, let's just go to the 1 hour time frame. And the 1 hour time frame, we did have a alright, what's going on in the 1 hour time frame? So on the 1 hour time frame, we got this bullish crown right here, this bullish crown formation, and the market hit the 1618 extension. And after it hit that 1618 extension, the market did start to fall. We broke in the trend line. The market tested that trend line, the backside, and then the market started to fall. Looks like the market came up and took out this A on the 1 hour time frame. So these Fibonacci's are no more good. We can go ahead and get rid of those. And let's see here. Let's kind of clean it up a little bit. Let's get rid of some trend lines here, because that's done. This crown formation is done, so we can get rid of that, and let's get rid of those, just to clean things up and get a better perspective on what's going on. Alright, we have these trend lines here. So the market has broken these trend lines, and right now it looks like the market wants to hold. It's looking like the market wants to hold this resistance. That 1618, the extension. That is a good level for price pivot action right now. We got all this resistance, and looks like we might have a little bit more resistance right here, with the market coming back up and falling back down. This one right here is kind of tricky right now, because okay, it's kind of unclear. So let's just go back and let's just walk through it again. We got an uptrend. The market came down, broke the downtrend, broke the uptrend, and was in the sell zone, but came back up. The retest to the backside of the uptrend line failed. We broke back into the buy zone. We broke this downtrend line, entering into the buy zone. The backside of the trend line, of the downtrend line, held as support, and the uptrend line held as support in the buy zone. So we're looking to buy this market long term. Looking to start buying this market long term. All right, daily time frame. We're looking for high prices and low prices. That is a nice low price. Well, there was a nice low price, and that was our first buy. Uh, we could still enter the trade because it's still fairly low, but we wouldn't want to put our stops beyond this A because that's it's more risk than it is reward. But we can take off little chunks and pieces on the 1 hour time frame, and like so. This 1 hour time frame. That was the Fibonacci off of the 1618, the crown formation. So with that being said, we can move our Fibonacci. Actually, you know what? That's the wrong way to do that. We're not going to move that Fibonacci. We're now just going to come in and bring in Fibonacci's here at the lowest point of that crown formation. Let's just bring in Fibonacci's. Alright, like so. And like so, there you have it. Alright, we can get rid of those. Now let's get rid of that, because that was the 618 retracement. Alright, now we have this up AB boundary. We have this capital AB boundary with the market up there at the messing with these trend lines right now. So guys, this one is really tricky. So with that being said, I would just kind of stay out of it right now, because I mean, we're looking to buy, we're in the buy zone, but it's just too much. Actually, it's too much going on right now. Market's making highs and lows, making lower lows, lower highs, and okay, there it is right there. And if you guys can, you can see the little the sub crown that we just drew up here. As you guys can see, we got left tip, we got center tip, and there's your right tip. Actually, let's redo that. That crown formation will look like this, because we got left tip, we have center tip, and here, there go that right tip right there. Bam, that's your little sub crown right there. Okay, now it's making more sense. Okay, like I said, we're in the buy zone, we're looking to buy this market. So okay, we have a capital up AB boundary. That's what I needed to see right there. Okay. Alright, so we can just bring in downtrend line here. Just bring in the downtrend line. What trend line would look like at this highest point? Probably wouldn't look like too much or nothing. And we got a downtrend line right there, and there it is. Now the chart is actually starting to come to life now. Now I'm starting, okay, chart is coming to life now. Alright, so we have the market playing with this uptrend line right here. It's like it wants to respect it, then it doesn't. But then we got this downtrend line. The market came up, and then it wanted to come back inside of this market. So now we see what exactly we want to do. We are looking to buy it, but again, now if we're going to buy the market, let the market break the trend line, come back, test the backside, and then we'll buy a counter trend line break on in the buy zone. And now, and once the market does that, then we can put our stops. 10 pips will be below the A, risking about 200 and so pips. No, actually, that's still, because you never want to risk more. You never want to risk more than what you're going after for when it comes to reward. So, okay, we'll just make adjustments. If the market breaks this trend line, instead of putting your stops 10 pips below the A, put your stops 10 pips below the lowest point of U-turn. And that would be the lowest point right there. So you're risking about 118 pips and going up to the 16180 extension. So I can risk 118 pips and going after 185. So that seems more feasible, because this is going to be your overall movement. Let's see. Let's bring in the Fibonacci. If you guys know about Gartley patterns, we should see that this Gartley pretty much has fulfilled itself already, because the Gartley is just a subswing inside of a capital AB swing. So you have your AB swing here. There's your C. Oh, no. I drew that wrong. My bad, guys. I drew that wrong, because that's not supposed to be like that. It's supposed to have A, B, C, D, and then the market goes up. I drew that wrong. Because you have your swing, you have your A, B swing, capital A to B, but then you have your A, you have your sub swing, you have your sub, your A, you have your A, B, and you have your C to D. There's your correction right there. That's basically a Gartley pattern. That Fibonacci swing fulfilled. Hit that 16180 extension right there. Then the market started to reverse. So, like I said, guys, we're just waiting for the market to break back into the buy zone. And then once the market breaks back into the buy zone, we get a counter trend line break. In the buy zone, we will buy the market, and we will put our stops 10 pips below the lowest point of U-turn. And we will go after this 16180 extension up here. And let me put a red line right there just so you can see it. We're going to go after that 16180 extension. Alright, but we're just waiting on the signal, so we'll see what's going to happen. Alright, that's the Great British Pound and Swiss franc. Alright, let's go to the Great British Pound, Japanese Yen. Great British Pound, Japanese Yen. We've been here for a minute now. Almost an hour just going through the Great British Pounds. That's fine, because we're going to get it done. Great British Pound, Japanese Yen. Alright, Great British Pound, Japanese Yen. Alright, we have the market breaking the uptrend, and with the market breaking the uptrend in the sell zone, then the market is respecting this downtrend. Market has actually entered back into the sell zone, and we had those resistance levels. So we are looking to sell short term, looking to sell long term and buy short term. And we're going to go to the daily time frame and look to see if we have a high price or a low price. Now that we know our direction of selling long term and buying short term, and you can see we're on the daily time frame. On the daily time frame, Japanese yen, we have the market with a downtrend. So we're in the sell zone, and the market actually broke a trend line, which I knew the trend line had got taken off by a smart trader, but that's fine because we have our crown formation that let us know that some trend lines have been broken. So since the trend line has been broken, we have our crown formation. We have a downtrend line. We drew in our downtrend line going toward the right tip of the crown, and there is our right tip of the crown at the 618 retracement, and you can see right at the right tip of the 618 retracement level, the market is falling. So we could be getting in on some sell trades right now. Let's get in on some sell trades. 1 hour time frame. Did the market not do exactly what we wanted it to do? Did the market not do exactly what we wanted it to do, guys? Look at this. Look how beautiful this was. Great British Pound, Japanese Yen. We had the Fibonacci up, AB upswing. Now the market, it got close to it, to this 1618D extension. I honestly believe that it actually did hit it because that line actually was right there. That candlestick was right on it, right on it. And then the market breaks the trend line. Market breaks this trend line, comes back up, tests and holds as resistance at the backside. You get in on the counter trend line break there, you sell the market, market falls, comes back up, makes a lower high, which is past support, becoming future resistance. Market breaks this outer uptrend line, comes back up, holds resistance at past support, becoming future resistance. Counter trend line break, we sell the market, and we would have sold the market here. Market would have went against us a little bit, but we would have came in again. And this is what I mean, guys, by I said that I actually missed these trades, because when I'm away from the computer, I'm really not doing much of trading because I don't really trust the charting on the MetaTrader 4. But that's it right there, and you can see that 618 just got hit. That 1618D extension just got hit a few hours ago. So if you guys were able to get in, you had that one trade, you had 2 trades, 3 trades, 4 trades, and then you would have had 5 trades because you would have sold the market again at that counter trend line break. That's why you trust your trading strategy. You have 1, 2, 3, 4, 5 different trades going down to the 618D extension, and that's the beauty of the trading style. And that's why you have to be patient and let the market make those moves, give you those signals, and then you just jump in and just trust the trade. Just trust your trading style. And I love it when things come together like this. So with that being said, going back to the daily time frame, that right tip of the crown has just formed. We're still not yet sure what's going to happen here on the daily time frame because this trend line could still be getting respected. And if the market wants to respect it, knowing that we just hit a 618D extension on the 1 hour time frame, it could possibly want to play around in this area of some sideways movement for right now. But we have the stochastic that's going down. We could possibly still get some pips to the south. So I wouldn't be selling right now because that is too low. That is too low. That's a low price. And as traders, we want to buy high. We want to buy low and sell high. Buy low, sell high. So that's Great British Pound, Japanese Yen. Let's get into the New Zealand dollar. It's the 1 hour time frame. All right, GBP, NZD. We got our weekly time frame. Just real smooth. We got this uptrend line here. Market has been respecting it. Well, we're on our 3rd Fibonacci swing. Market came down to a, let's see, did the market come down to that the A6? Did it come down to the 786? No, not quite. So we still going up to the 1618D extension. All right, so we're buying this market long term, and we are selling this market short term. And as you can see on the Fibonacci, these Fibonacci levels, see how the market likes to use each one of these Fibonacci levels as some type of resistance or some type of support. So you could consider this as some sideways movement. Then the market now decided to go into, now the market is deciding to trend, and right now we are in that uptrend portion. Well, we're in the uptrend portion of this movement. So we're looking to buy long term and sell short term. Daily time frame, high and low price. So daily time frame, the high and low prices, we have this Fibonacci capital AB swing, and with that capital AB swing, we have the market coming down to the 8-6 retracement, and this is, we're going to the 118. That is our D extension. Let's bring in trend lines just so the charts could look more alive to us, just to see what kind of story the market's going to tell. All right, so in the market right now, is that a high price or is that a low price? So this right now would be considered a pretty much a high price, because it looks like the market is going to yeah, it looks like the market is going to break this trend line here. And I'm trying to see what was the, okay, yes. So in order for us to buy, this is what we were looking for: the market to break the trend line, come up, wave down, then once if it tests and hold this outer trend line, bring in the counter trend line, get a counter trend line break in the buy zone, then we'll buy up to the 118, the extension. But right now the market is breaking into the sell zone right now. We have a stochastic that is oversold, stochastic that is overbought. So with that stochastic being overbought right there, we start looking to get some short-term sales. So let's go to the 1 hour time frame, look for some short-term sales. And let's get these Fibonacci's off of here. Bye-bye Fibs. Bye-bye. Oh no, I got rid of the Fibs that I actually wanted. Okay. So with that being said, as you can see, this market had broken this trend line, and the market came back up, and now the market has gravitated toward this next trend line. So we can bring in downtrend lines here. Actually, let's make those red. You know, I like mine. I like everything color coded. Blue means up, red means down. So when I see those colors, I can correlate the meaning. Alright, and there you have it. We extend. You have the market giving us a false break. Then the market held, came back up. But now the market has actually broken this downtrend, broken this uptrend in the sell zone. So start selling the market. And actually right now, if you want to, you can just jump in selling right now, because it's not too far where the market is making a move right now. Market is making a move to the south right now. We can jump in and we can start selling this market right now. Actually, let's do this live right now. Great British Pound, New Zealand dollar. I'm just going to jump in my account and I'm just going to put a sell trade right here live. Just throw a sell trade out there. Alright, GBP NCD. There's your new order. We're just going to sell the market execution. Alright, we're selling the market. Alright, so let's go through and find where my stops are going to be and where I'm going to place my take profits. And we just simply do that by bringing in a smart Fibonacci. And that smart Fibonacci, if I'm risking more than what I'm buying, or if I'm risking more than what I'm taking as profit, then we're just going to bring it down a little bit. So if my take profit is going to be 140 something pips, and I am risking 160, so I would risk more than what I would profit. So if I'm going to get 140 pips, the highest point of U-turn is here, because here it'll be a 1-to-1. I would put my stops right there, which is perfectly fine with me. It's perfectly fine with me. Oh my gosh, Guys, I didn't even pay attention to it. Check this out. I didn't even pay attention to it, guys. I didn't even look. So the market came up to the 8.6, so that means we're only going down to the 118. Okay, so since the market came there, and we're going down to the 118, that's only 62 pips. So if I'm going for 62 pips, I'm just only going to risk 62 pips. That's a 1-for-1 risk to reward ratio. So 62 pips, what's that price? 9261. Actually, let me get on the line. So, all right, 9261. That is that price range. So I'm going to set my take profit, and let's modify that. So remember, not trying to hit home runs. I'm just trying to be. We're trying to be consistent, and we want to. If we do this over and over and over again, that's how the profits come. So 1.9261. All right, that is going to be my take profit, and I'm going to put my stops, and my stops is going to be 60. If I'm going for 60, I'll risk 60, and that's pretty much this price point right here. $60 pips. And that price point is 1.9383. All right, there it is. So that would come 60 pips. The current price point. Yep, 9326, risking 60 pips. Yep, that'll be 93. That'll be about 938. So that's going to be the trade. And yeah, that's going to be the trade right there. Going to see how this trade plays out. Market has done exactly what we expected it to do, and if we want to get a good look at it, I know you guys can see it already. You have your sub swing. That sub swing actually has been hit. There is your godly pattern. You have your X, then you have your A to B, B to C, and then the market went up from C to D. Godly pattern, a reversal pattern, or a correction pattern. Guys, there it is. That's it right there. And if you guys watch that video on godly patterns, simple way of doing godly patterns, that's it. There's your godly pattern. It's a correction. We have it in the sell zone. We have our down Fibonacci AB swing. The market did come up to the 8.6 retracement. So so we're going to try to trade it to the 118. And you can look left and look at all that. Look at all that price pivot and that price action around this point. Market likes to do the same things over and over and over again. Actually, yeah, let's modify the trade. Okay, there's a modified trade. So we're just gonna let that run. And we got we're practicing property. We are practicing proper equity management. I'm saying property. We're practicing proper equity management with this trade. We're not going crazy with it. We're just going in at $1 per pip, and we're just trying to be consistent. Doing the same thing over and over and over again. Trusting these Fibonacci's, trusting these trades, going through analysis, and just letting the trade rock out and do what technical analysis says that it wants to do. All right, that is the Great British Pound New Zealand Dollar. Let's go ahead and jump in some Great British Pound USD, and I'll probably have to cut it off after this and and I'll just come back with another video going through the other currency pairs. So Great British Pound, New Zealand Dollar, same thing. Downtrend obviously was broken. Got this uptrend, then we got this up capital AB Fibonacci swing, and right now we are in the uptrend portion. We're starting to come into the uptrend portion of this Fibonacci swing, and that will take probably a couple of years to even happen. So direction is bullish. Overall direction bullish. We'll buy the market long term, sell the market short term. And here's the daily time frame. Oh my god, this is the NZD. I said USD. I was wondering why this was looking the same. Y'all gotta figure it's 3 o'clock in the morning. Things happen. Things tend to happen at 3 o'clock in the morning. But it's alright. Alright, just looking at my broadcast, make sure everything looks tight. Alright, Great British Pound, United States Dollar, we got the downtrend line. Market broke that downtrend line, and we got this uptrend line. The market broke that uptrend line back into the sell zone. Now we have consolidation. Market has been moving sideways from breaking into the breaking back into the sell zone. So with that being said, all we're gonna do is just we go sell these resistance point, and we're going to buy support. Just keep it simple. That's it. Just keep it simple. So right now, market. Hold on. Okay. So every time the market comes down, it goes back up. Hits the price point. The market comes down. Then it goes up. Then it comes back down. Then the market goes up. And the market comes down. So the market goes back up to resistance. So what is the market wanting to do right now? The market is getting ready to come down. And that's what we're going to do. We're going to look for selling this market. So let's jump into it. Stochastic is overbought. And we got this the daily time frame. We're looking for high and low prices. Right now, that daily time frame, that's at a low price, so that we will not be looking to sell at the moment because that price is too low. But we do have a crown for we have a bear crown formation here. Get rid of those Fibonacci so it can look good. And the right tip of this crown, did we find the deeper right tip of the crown? No, actually the right tip where the crown is currently still held resistance. So then the market is starting to fall. And here's our 1618D extension. So we're looking to sell this market down to there. But on the way down, we'll take little chunks and pieces off. And actually, let's bring in trend lines. Let's bring in downtrend lines, just to make sure the market hasn't entered back into a buy zone or something. And then we actually, check it out. So downtrend line, this downtrend line has been broken, and now we have uptrend lines in the buy zone. But there you have it. You have those trend lines. Alright, we were back in the buy zone. Now the market held resistance. Now we've entered back into the sell zone. So there you have it. So yes, we're still selling. I'm going to trade this off the daily time frame. I just need for that stochastic to get back into the overbought zone, and we're still in the sell zone. Get a counter trend line break, and we start selling the market off the daily time frame. 1 hour time frame. I don't know what happened on the 1 hour time frame, but this 1 hour time frame, you can see where the market has broken the trend line. We are in the sell zone. Let's bring in trend lines just to see how far we may want to go. So that's a nice downtrend line right there. I like that one. Looks almost perfect. And then we can bring in Fibonacci's here. And there it is. You have a Fibonacci. You have a Fibonacci with a 618 retracement. So that means we're going down to the 618 extension. The 1618 extension. And that will be that'll be about 90 or so pips away. And you risk 90 pips. So we're going for 90 pips and you risk 90 pips. So you put your stops right here, and you will go down to the 1618 extension. But in order for that to happen, all you need right now is the market is going back up to a high price on the 1 hour time frame. Just let the market break the trend line. Let the market break the counter trend line. Oh, that was kind of small. Okay. Oh my goodness. But yeah, like I was saying, let the market break the counter trend line. If the market's going to break that counter trend line and it breaks it bearish, try to go ahead and grab those few little pips, and you know the pound pairs, they're good for it. They will give you those pips, and they will give it to you quick, fast, and in a hurry. So, with that being said, man, that is the British pound pairs. We have successfully went through all the British pound pairs. That's on the chart right now, as you can see. And we had some sell trades, we had some buy trades. The market has been making a lot of moves this week, and the analysis has been lining up. And hopefully, you guys was able to catch some of them trades. I necessarily will actually start going a little bit more harder as far as going with the trades, and just posting trades and putting stops and limits, and doing buy stops, doing buy limits and sell limits, if I can't find a specific trade at that particular time. So man, hopefully this was helpful to you guys with the Great British Pound, these currency pairs, man. But before you guys go, if you guys can bear with me for a few more seconds, I would like for you guys to go check out the Facebook page, winmoreforextrades.com. That is the website. If Facebook will hurry up, it looks like Facebook wants to play around. I think that has something to do maybe with, okay, here we go. Yes, hopefully I'll have time to get around to loading up this video to my Facebook fan page, but I know I'm loading this up to YouTube. And if you guys don't know, if you're watching this on Facebook, my YouTube channel is Joshua forex /gamer, because I am into both. I'm passionate about both. Forex is just a recent phenomenon that I'm passionate about, and I really like it. I love it. And as you can see, I'm putting out as much content as I can, trying to put out as much value as I can. And I'm really appreciative to everybody that's been rocking with me, and that's following the pages, and that actually engage in the content. And I really appreciate you guys, and I really thank you for that. Because you can see, I just put in a lot of time here at 2 o'clock in the morning, when it's now 3:40 Central Time in the morning, Friday, and I have to be to work in a couple of hours. So yes, I am taking some time out of my schedule to come here, but hey, that's all a part of the grind, and I thank y'all for hanging out with your boy. But with that being said, I'm finna go ahead and get up out of here. Take me a little break or so.